Hello again, welcome to another episode of the Uranium Market Minute. Today is Sunday, October 20th, and this is episode number 209. My name is Justin Huhn. I am your host. I'm the founder and publisher of the Uranium Insider Investing Newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. As always, nothing that you see or hear in this podcast is intended to be investing advice. I am not your financial advisor, and this is not investing advice. Please always do your own due diligence when it comes to investing and always take responsibility for your own choices. Okay, it is really good to be back with you guys again. It has been a minute, right? It's been many months since I last published. In fact, the last public podcast that I put out was back in April of this year. Now, I've done a number of public interviews, especially over the last month and a half to 2 months as the sector started to pick up again, but I haven't put out a uranium market minute. So my sincere apologies for that long delay. I hope that you all are doing very well. I hope that you survived the boring and difficult summer for uranium investors and that you hung on and or had the conviction to add during the summer lows, because now we have crossed the Rubicon and the sector is moving up really nicely right now. So I'm very happy. I'm very pleased to see that. And hopefully you hung in there. Hopefully you didn't capitulate at the lows. It definitely got difficult there. Sentiment was as bad as I've ever seen it in my entire investing career following this sector. I've been following this sector since 2017. It's been a very long period of time. And I would argue that despite the fact that there have been periods of time where the equities performed more poorly than this past summer, I've never seen sentiment this bad. I attended the WNA conference in London. That was a fantastic conference, really high level information. I was able to give timely messaging to Uranium Insider members. So if you are a member of our newsletter, thank you for the support. And hopefully those messages during the summer, the August lows, the September lows, did help you with your conviction for this trade for the long term. And if you did add during those periods of time, as I personally did, then you're probably up handsomely, especially over the last week. So I'm going to cover today a couple of the news elements that have come in over the past 6 weeks. I'm going to tell you what's moving these markets, and I'm going to give you an idea of what I believe is coming for the uranium sector investment. Before we get into that, I want to tell you first off, right off the top, that we are going to be holding another public webinar. This is a free public webinar where we are going to cover the major trends that are happening right now for this uranium investment. This webinar will be taking place this coming Friday. That is October 25th. And I'm recording this right now on Sunday, October 20th. So hopefully we will see you there. If you want to join us for that webinar, the registration link is in the description below. Please click that. It is free. There is limited space. We have a limitation of how many people we can register for this webinar. So secure your spot there. We hope to see you there. This is going to be a higher level webinar. We're going to talk much more in depth about some of the things I'm going to mention today. Additionally, if you are a Uranium Insider member, you're going to hear an interview that will be put out later this week. And if you decide to join at any point, if you're watching this and you're not a member, you will have access to this as well immediately. This is an interview with somebody who is deep in the weeds in AI, and we're going to talk a lot about the demand for electricity and the desire for nuclear collaboration between the big tech companies and what is going to be driving, in our estimation, and in the estimation of the interviewee that will be hosted in this video. So this demand is going through the roof, and it's going to be driving the sector for many years to come. So that recording will be available to Uranium Insider members later this coming week. So on that note, why don't we dive into what the heck has been going on? Okay, so obviously, I have not published in quite some time. I'm not going to go over every single fundamental development that has happened between April and now. That would be a 5-hour video, and I'm just not going to do that. So really high level, some of the things that have happened. Kazatomprom revised down their guidance for 2025 production. They're seeing continued issues with sulfuric acid procurement. There's big differences in year-over-year production levels between the Chinese and the Russian joint ventures. And the Western joint ventures, specifically Cameco and Inkai, was down almost 20% year-over-year production. That's kind of telling. During the last few weeks, we've seen another gigantic contract in negotiation between a Chinese utility and Kazatomprom. This is the third large contract where a Chinese utility has attempted to secure deliveries out into the future of uranium, that the total value of those deliveries in the contract terms is greater than 50% of the book value of Kazatomprom. This requires a special shareholder vote to approve this contract. It will, of course, be approved. That's the third. So the Chinese are bolstering inventories. They're building up their coffers of uranium while the rest of the world seems to be largely asleep at the wheel. This is an incredible, incredible development here to see the growth and the demand for uranium and the growth of nuclear to be blowing out to the upside in every single supply and demand model, especially with what is happening right now with the tech and AI support of nuclear, yet to see basically only the Chinese and a handful of other forward-thinking utilities making sure they're covered late decade into the 2030s. So this is going to lead to a very, very large move up in price as soon as we see the Western utilities come in with large demand into the term market. And that is coming. So those are some of the more influential pieces of news that have come into this sector over the past number of months. Then we've seen an absolute tsunami of positive news in the last 6 weeks. To start things off, last month, following the WNA conference in London, we heard an announcement from Constellation and Microsoft that they have entered into a 20-year power purchase agreement at very, very high electricity prices. So that's rumored to be north of $100 a kilowatt hour. This power purchase agreement is in order to secure sufficient future profit guidance for Constellation to justify the restarting of 3 Mile Island Unit 2. So this is the unit that was shut down in 2019. Unit 1, of course, melted down in 1979. Unit 2 continued to operate all the way to 2019. Now, Constellation shut this unit down because they did not have a supportive enough electricity market to justify its continuation and to invest the necessary capex to allow for that life extension. Well, they're bringing it back online. They actually have the governor of Pennsylvania pushing the Nuclear Regulatory Commission to fast track this restart. That news came in on a Friday. The following Monday, during Climate Week in New York City, we had representatives of 14 of the largest banks in the world with a cumulative 14 trillion in assets under management pledge support for the growth of nuclear. Now, this is basically in line with these COP28 goals that were announced last year, which was 25 countries signed on to pledge for the tripling of nuclear energy by 2050. Now the big banks are saying, we are going to support it. We're going to put our money where our mouth is. There's been plenty of doubt over recent years for obvious reasons that the banks would never come back and touch nuclear energy. The payback period is too long. It's too expensive. There's too much risk of cost and schedule overruns, et cetera, et cetera. And these are certainly justifiable concerns. But now the banks are saying, hey, we're on board. And I think that the banks can see where the puck is going in terms of electricity growth. This is a graphic of electricity usage in the United States from 2010 to 2023. The usage has essentially been flat. That is now changing. That is what is driving a lot of the policy that we've seen come out of the Department of Energy in the United States. That is what is driving the tech companies seeking out nuclear. Nuclear is a growth story now. And those two stories I just mentioned, the Microsoft and Constellation deal, the big bank supporting nuclear, those are just two of multiple stories. So let's get into a couple of more. Just last week, we heard that Google has made a deal with Kairos Power. This is a small modular reactor builder. They have a deal with a power purchase agreement to build 500 megawatts of SMRs. Now, this is multiple units of the Kairos Power small modular reactor, but this is clear evidence, again, of big tech embracing nuclear. Now, my understanding is that tech companies want nuclear purely. There's a reason why we're not hearing they're securing deals with other forms of energy. Multiple reasons, right? So obviously, they are not going to want to publicly state that they are securing deals with natural gas or coal, especially coal. That's never going to happen. Natural gas, maybe for Tesla/X with Elon, he might shore up near-term electricity demand coming from both Grok and the data centers and the hyperscalers associated with that, or the data centers associated with full self-driving with Tesla. Both of those things could be supported by nat gas in the short term because that's Elon. He's going to do what Elon does. Other companies, Google, Microsoft, Amazon, potentially Meta. Meta has not made an announcement yet of a nuclear collaboration. We're going to hear that soon. These other companies have extreme risk in making an announcement that they are going to power future data center growth with fossil fuels. They just can't do it, and they don't want to do it, okay? So everybody wants nuclear. There's two important takeaways for this. One, every single reactor, as far as I can tell, in the United States that was set to shut down in the next 10 or 15 years is going to be life extended. I would guess that one of those that maybe on the fence would be Diablo Canyon in California, simply because California is a hard, far left, Democratic run state for the last 20 years. And even with that said, they gave a 5-year extension. Well, now they're growing a lot of solar with a lot of battery backup. They might want to shut that down 2029, 2030. Even though I'm in California, my electricity bills are going through the roof. Even with that said, they might shut it down. So I'm not holding my breath for Diablo, but if California wants to grow data center growth in Silicon Valley, and they probably do, they're probably going to push to continue the operation of Diablo Canyon. Everything else is going to get extended. In fact, we're seeing restarts. Restart of Palisades in Michigan for next year. Restart of 3 Mile Island with the deal I just mentioned. Nextera is looking at potentially restarting Duane Arnold in Iowa. Now we're starting to hear whispers that the VC Summer plant that was in early stages of construction back in the 2010s, that construction was halted when Westinghouse went bankrupt because they were building that in conjunction with Vogtle 3 and 4. That project got halted. It was a major financial disaster in South Carolina. They are actually talking about resuming construction of that plant. That is how things are going here in the United States with nuclear. Major support from the DOE. The DOE is now putting out $900 million in funding for fast tracking the development of small modular reactors. They've got an LEU RFP, a HALEU RFP, the Strategic Uranium Reserve. They just released an updated liftoff report for the rapid push of commercialization of advanced nuclear in the United States. This is all coming together. In fact, look at this graph coming from this liftoff report. This is phenomenal, right? So this is showing you what the DOE is looking at. Nuclear provides a differentiated value proposition. So is it clean? Yes. Is it firm? Yes. What does that mean? It's baseload, right? It runs all the time. Low land use? Yes. Low transmission build out? Yes. Concentrated local economic benefits, 1,000%. In fact, the vast majority of people that live within a 20-mile radius, like 90-something% of the people that live within a 20-mile radius of an operating nuclear reactor in the United States, love nuclear, support it, and would absolutely support further reactors being built at those sites. In fact, that's where we're going to see nuclear growth in the United States. Dozens of current operating nuclear sites already have permits to build additional units at those sites. And then lastly, direct heat applications. Of course, nuclear obviously wins that. It's the only power source to check every single box in this particular metric. So fantastic to see the DOE publish this support for nuclear. And this is a bipartisan issue in the United States. The Democrats and the Republicans agree on absolutely nothing except for nuclear. So fan-freaking-tastic. What else have we heard in the last 6 weeks? Oracle has permits to build 3 SMRs to power a data center. So we have Oracle, Amazon, Google, Microsoft, all publicly expressing, and not just public expressions, but actual deals to either buy nuclear directly, in the case of Constellation and Microsoft, 3 Mile Island, Talon Energy, and the Susquehanna plant in Pennsylvania. That was announced in March earlier this year. Another data center. They want to build the data centers within a stone's throw of nuclear. They don't want loss of power via transmission. They can't deal with intermittency, period, the end. They cannot. And if you're a Uranium Insider member, you're going to hear why in 4 or 5 days when we publish this interview with this AI PhD. They have to have nuclear, okay? The only other case potentially is hydroelectricity, but even in that case, everything's already damned, all right? So new nuclear is what is going to come to support the growth of the data centers. And it is going to happen because the tech companies have an enormous amount of cash. And if they're going to be building 100, 200, 300, 400, 500 billion dollar massive multi-gigawatt data centers, you think they're not going to write a check for 5 or 10 billion to power it for 100 years? 100% they're going to. That's where this is going. Life extensions and new nuclear is coming to the United States. So we've just seen a huge run in the uranium stocks from early September until the close of last week. Some of these stocks are up 40, 50, 60% over that 6-week period. And the interesting thing is that the physical market hasn't moved yet. We had a single week of very high volume trading in the spot market. The term market is still quiet. There's a lot of conversations happening off market. Sometimes these term contracts can last 6 months, even up to a year of negotiation between a nuclear utility and a producer to come to terms on what that contract will look like for future deliveries. So the term market is always slow to move. The spot market is more of like a short-term disposal of material market. All right. So not a lot of volume is done there typically, and it has been relatively quiet. Sure, it picked up in volume compared to July and August, but it's still not seeing major volume, and it will. And that's the exciting part of this investment right now, right? Because we've seen a 40, 50, 60% move that has come from the proliferation of this positive news around nuclear energy. And obviously, the takeaway is that the fuel for all of this is uranium, and supply is lagging big time. So what we can tell from here is that this fundamental news flow that we've seen, especially over the last 6 weeks, but honestly, over the last year or two, conversion and enrichment skyrocketing, Kazatomprom having trouble ramping their production. Every other piece of production is either slow to come online, if we're talking about brownfield, or it's not hitting their production guidance. Encore, UR Energy, Boss Energy, they're all getting into production, but they're not hitting the expectations of production, right? Global Atomics DASA has been mired with issues coming from the coup in Niger of last summer. The issues are still ongoing there. France's Orano, they can't ship material out of Niger. They're going to produce less than 40% of their typical amount of uranium this year from Niger. I could go on, but the supply is having trouble responding. Yet, the demand picture hasn't looked like this since the 1970s. Every single operating reactor in every single jurisdiction that isn't completely whacked out with ideologically driven energy policies. So now that Germany's done, what is left of countries that fall under that umbrella? Spain, Taiwan, maybe there's one or two others. Everybody else is building nuclear, life extending nuclear. Okay. So that's what we're looking at right now. The demand picture is blowing out to the upside. The fundamental foundation is being built, and that foundation is the big players that always have enormous influence on policy. These are the tech companies, want nuclear, and they have the cash to make it happen. So the operating plants of the world are largely de-risked because of this electricity growth in demand. And what that means is that the pull on uranium is going to be enormous. And when it hits, this stuff is going to fly in a generational manner. So the big piece of this investment that we've been largely investing for since the very beginning is about to happen. And that's the contracting cycle, right? That's replacement rate and beyond in volume being contracted year over year. So what are we looking at? 185 million pounds of uranium going to be consumed in the world's reactor fleet this year. How much is being produced? 150, 155. Then we've got secondary supply, but we also have secondary demand, but we're looking at about a 30 million pound deficit this year alone. Now, supply is starting to respond, and that deficit will actually shrink a little bit in the next year and maybe even two. But we are going to need all of the large projects to come online in order to even allow for the fueling of the growth of nuclear that we're looking at right now. So, based on this move that we've just seen, this has been driven entirely by news, hasn't been driven by the physical market move. This is reminding me of December in 2020. On that note, let's look at the charts. I'm going to start off with this chart here. This is URA, or a basket of uranium miners, relative to the spot price of uranium. As you can see here, we have had two very large moves on a relative basis over the past 10 years, right? So the commodity bottomed in late 2016, but the stock started to move before that. And this, of course, was following a very long, very brutal decline in uranium equities, a disappearance of most of the companies in the space from 08 to 2015, right? So there was a dozen or 2 dozen left in 2016, and they moved very, very sharply when the commodity bottomed and everybody believed that the bear market was over. Now, of course, we had a long period, a multi-year period from then of sideways to downward consolidation, but we had a huge move up in that big leg of the market. So we're talking about the bottom 2016 through 27. This is about a year where this on a relative basis, 150% move. That's very big on a relative basis. Why? Because the price of uranium moved up also. Then we had a long consolidation all the way down to the COVID lows. So then again, once COVID bottomed, that was March 2020, sector started to recover. This was after the announcement of Kazatomprom suspending well-field drilling, Cigar Lake suspending operations because of COVID. Sector started to recover. Then in December 2020, the sector just absolutely blew up. So from those COVID lows, it's probably not even fair to go from the COVID lows, but December through November, 100% move on a relative basis. Now, first of all, the commodity was not moving in the early months of that run. December, January, February, it barely moved. And of course, it had a follow-on move, but we saw a big move, relatively speaking. In my estimation, we are now entering the third move like this that is going to last probably for a year or maybe two, and maybe longer. This all depends on the pace of buying on behalf of utilities and how quickly supply can respond. Well, we know supply can't respond in the next few years. It literally just cannot. That is what makes this opportunity and this point in time so unique. So we think this is going to fly to the upside. Are there going to be consolidations along the way? Of course. Is it going to go up in a straight line? Of course not. Are there always the opportunities for exogenous events or broad market swoons for whatever reason to affect us to the downside? 100% that's always possible. But speaking directly for uranium equities and the setup for the physical market, this looks incredibly, incredibly positive. Now, I am so bullish on the commodity itself, and I've said this before, that this chart could literally go like this, and we're going to make a lot of money, right? Because the miners, even if they go up in conjunction with the metal, which is going way, way higher, it's still going to be very good. But of course, you buy mining stocks for leverage, right? You want leverage on the commodity. The safe bet is just to buy spot and forget about it. And I wouldn't fault anybody for doing that. If you want leverage, though, the mining stocks, usually when risk is on in a robust bull market for a commodity, tend to offer leverage. So we do expect this to do this, all right? Maybe not straight up. We'll have a little backing and filling along the way, but I think we're in the early stages of a very, very big leg for this market. And part of the main reason why I'm believing this is because the physical market has been quiet since basically February, right? February, March was starting to tail off from that big move we saw last year. Then it was quiet from the springtime all the way until now. It's just not happening yet. And it will. There's no other options. You have to understand, you cannot not operate a multi-billion-dollar strategic asset, especially in an environment where your profit margins are skyrocketing as a nuclear utility. So we're going to see this price move, and we're going to see the equities have enormous leverage to that. Let's look at URA, not ratio, just URA itself. Huge, huge move last week, okay? And if we look at the weekly chart, this was now a more than a decade high weekly close. We haven't seen these prices since 2014 for URA. And this is even more notable because the outstanding share count for URA is way more than it was, right? So share counts obviously declined during the bear market, but they've been improving since the bull market started, or increasing, I should say, since the bull market started. So even with that said, multi-year high for URA, gigantic candle up 11.5% last week alone, second highest weekly volume, or third highest weekly volume perhaps for URA in its history. Big, big week, a lot of flows coming into the ETFs. That's very, very good to see. Cameco, of course, as the industry lead sled dog, all-time high close. All-time high for Cameco. It's starting to trade like a growth stock, and maybe it should. This is not just a uranium miner anymore, right? They have 49% ownership of Westinghouse, and imagine how potentially incredibly profitable that could be for the company in the next 20 years with what we're seeing. And we're going to see more AP1000s being announced for new builds. URA against the S&P has made a nice move off of the bottom. Now we've got this big, long, rounded arc. Of course, I draw this so it kind of hits these points, but you get the idea. Just trying to make a point about that rounded arc. Good move off the bottom relative to the S&P, even though the S&P is making a new all-time high every other freaking day. Here we are. Nice move off the bottom. This has a little more technical work to get done before this is fully bullish in terms of the moving averages. A little bit overbought, maybe a little backing and filling. Let's look at SPUT. SPUT, in my opinion, is a screaming buy here. Why? The physical market hasn't moved. And it's gone from a large discount. It was trading at a 15-16% discount back here early September and early August. What happened early August? We had the yen carry trade unwind that caused a washout across markets. I was buying heavily at that point, and I sent a message and a video update to Uranium Insider members telling them exactly what I was doing. That was early August. Now, I had to hold those stocks going up and then back down during the remainder of the month of August, but that double bottomed in September, and then we've been on a moonshot since. So high conviction and understanding elements of seasonality, understanding elements of the physical market, and understanding the news flow that is about to come. So obviously I knew about WNA because I attended it and I knew that was coming, and that's always a mild catalyst for the sector. I knew that there was going to be this Climate Week event and that there was going to be something related to nuclear. Did I know that we were going to see every single tech company besides Meta, and they're coming, by the way, announce some sort of collaboration with nuclear? No, I did not know that. But that all the signs were there that something like that could happen. So positioning with robust conviction when everyone else is throwing in the towel has been an enormous boon for me personally and for our membership as well. Looking at, let's see, we already looked at this. The spot price of uranium, hard to see this in this candle, so we'll look at this as a linear chart. Little move off the bottom, still nothing really to write home about, but we've got higher highs, higher lows, and this is the most important piece of the spot price. And the spot price, like I said, is kind of a surplus disposal market, the spot market. The term price has been stair-stepping up. This term price is up 20% this year, despite the fact we still only have 53 million pounds signed in the long-term contract market this year. The price is up 20%. If you have one takeaway from this podcast episode, it is this. When demand pulls back and price continues to rise, that is a tell. That's it. It's really that simple, and it really can be that simple. So what happened over the last year? For the last year, we've gone from 50 bucks up to 106 and back down to 80. Now, why didn't we come back down to 65? Why didn't we come back down to these levels? Why indeed? Why indeed? I'm not going to look at any more charts. You guys get the idea. Basically, technically speaking, most of the equities in the space are looking pretty overbought on daily RSI. It would be very technically healthy for the sector to take a breather here. I'd like to see the sector rest, maybe pull back a little bit, allow for the rising 50-day moving average to match up with the stock prices. That would be very, very good. Now, I don't know how quickly we're going to see the physical market move. We do have a conference coming up, the NEI International Uranium Fuel Seminar. That's at the end of the month. We're probably going to remain quiet in the physical market between now and then. Following that, there really aren't very more levers that the utilities can pull. We're going to see a move in the physical market. It's going to be big. I'm telling you, it's coming. How soon is harder to say, but it is coming. When it does, the uranium stocks are going to go on a historical generational move. This market doesn't end until supply matches off with demand. The demand picture gets better almost with every passing day. The supply picture remains constrained for the time being. So a huge opportunity in my estimation that we have. I'll remind you once again, we are having a public webinar. It is free. We'd like for you to join us. Click the link in the description. Like I said, there's limited attendance. Secure your spot if you want to join us. We're going to dive deeper into the trend of tech and AI data centers driving electricity demand, making deals with nuclear. This is a big, big tailwind for the sector. So I hope to see you there. Again, if you are a Uranium Insider member, you're going to have access to this interview recording with an AI PhD that we spoke with last week. Really, really profound takeaways coming from this conversation. You're going to see that later this coming week. Thank you so much for all of your patience and all of your support. I will be doing these more frequently going forward. Hopefully you were able to hang on. Hopefully my public interviews, and if you are a member, of course, my messaging directly to you of what exactly was happening this summer helped you to hang on and or add to your longs during the washouts. You don't want to trade with everybody else. You want to trade opposite your emotions. And when people are angry at each other, when they're publicly capitulating, don't sell. That's your time to be buying. That's your signal to be buying, especially and importantly, if you have conviction going forward on the continuation of an uptrend. That makes the dips buyable, is knowing that this will continue to the upside. The long-term cycle will have cyclical drawdowns. Those are your opportunities. And we had a major one 6 weeks ago and another one 10 weeks ago. You had it twice, and you had a washout period during the summer to shore up longs, add conviction longs, add leverage if you like options and things like that. So far, so good with this next leg. I honestly think we could have some volatility around the election. We could use a breather here technically, but this stuff is going to launch when the physical market moves. Absolutely launch. The kettle lid is rattling and it's going to blow off. It's just a matter of time. I hope all is well with you in your life and you have had a good month in terms of your investments. Thank you again for the support, and we will see you again soon. Cheers.